What if I told you there's a predictable financial pattern that has determined the rise and fall of every global superpower for the last 500 years? Well, that is the exact theory we're digging into today, and it all leads to one pretty unsettling question. Is the United States next in line? Our source material kicks things off with this bombshell. While you were scrolling social media, the largest financial institutions in the world started doing something they haven't done in 75 years. What that's really saying is that the so-called smart money is already making moves, quietly shifting away from U.S. assets. The big question is, why? What pattern are they seeing that maybe the rest of us aren't? Well, at the heart of this entire argument is one powerful and kind of scary idea, that there's a recurring cycle, almost like clockwork, that has shaped the fate of every global power for half a millennium. And according to this analysis, it's not just a guess, it's presented as a near mathematical certainty. So what exactly is this cycle of empire? Well, think of it as a predictable four-stage journey, a path that leads from the absolute peak of financial power all the way down to a pretty devastating collapse. Let's break down exactly what those four stages are. All right, so here's the roadmap. Stage 1 is Ascension. That's the good part, the rise to global dominance. But then comes Stage 2, Overextension, where spending and debt start to spiral out of control. Stage 3 is the really critical one, the silent exodus. That's when the big money, the smart money, starts quietly heading for the exits. And finally, you have Stage 4, the collapse that, according to the theory, inevitably follows. Now, you might be thinking, that's a pretty bold claim. And you'd be right. But the source material doesn't just pull this idea out of thin air. It applies this four-stage model to three historical superpowers to show how it has played out before. You see, this pattern is tied directly to one thing: which nation controls the world's reserve currency, basically the world's money. Back in the 1500s, it was the Spanish real. Then, in the 1600s, the Dutch guilder took over, and for much of the last couple of centuries, the British pound sterling was king. The argument is that each of these empires followed the exact same path to ruin. And if you look closer, you can see these striking similarities, these specific triggers. For Spain, spending hit 3 times its tax revenue, which led to multiple defaults. For the Dutch, a mind-boggling 20 times explosion in debt. And for Britain, a massive debt-to-GDP ratio after World War II eventually led to an IMF bailout. The source points to these as eerie parallels. All right, so we've looked at Spain, the Dutch, the British, which of course brings us to the elephant in the room. The analysis pivots from history right to the present day, arguing that the United States isn't an exception to the rule, it's just the latest empire to step into this very same cycle. So according to this model, America's Ascension phase, its golden age, ran from the end of World War II right up until 1971. That year is crucial because that's when the US dollar was officially untethered from gold. The argument is that this moment kicked off the overextension phase, basically opening the floodgates for government spending and debt on a scale never seen before. And just look at the velocity of this debt increase. We're talking less than $1 trillion in 1980, rocketing to a projected $38.4 trillion by the end of 2025. This incredible acceleration is presented as a classic symptom of a nation deep in Stage 2 overextension. And get this, it's not just government debt. The analysis claims that when you add up everything, public debt, corporate debt, and all our household debt, the grand total is over 370% of the entire U.S. economy. Let that sink in. The total debt is more than 3.5 times the value of everything the country produces in an entire year. So how does that number stack up against history? Well, this is where it gets really eye-opening. The source points out that Britain's crisis began when its debt hit 130% of GDP. Spain's was around 200%, and the U.S. today, at 370%, this analysis suggests we are in completely uncharted territory. Okay, so this brings us to the most urgent part of the entire argument. The claim isn't just that the U.S. is in trouble, it's that we're no longer in Stage 2. The source alleges that the U.S. has already entered Stage 3, the silent exodus. The smart money is already leaving. And the source says the proof is already happening. It points to countries like China selling off hundreds of billions in U.S. debt. But it's not just rivals. It's also key allies like Japan and Switzerland. It's the biggest financial institutions in the world like BlackRock and JP Morgan. Even the Federal Reserve itself is reducing its holdings through what they call quantitative tightening. The key takeaway is that they are all, in their own way, reducing their exposure to U.S. assets. Another huge warning sign, according to the source, is the slow fracturing of the petrodollar system. For decades, there was this simple, informal understanding. If you wanted to buy oil on the global market, You needed US dollars. That created a massive, constant demand for our currency. But that system is now showing cracks, as major oil producers like Saudi Arabia are now open to accepting other currencies. That's a direct shot at one of the main pillars of the dollar's global strength.
So if the pattern holds true, and we really are in stage 3, where does this all lead? Let's look at the final stage. Based on this historical model, what would a stage 4 collapse actually look like?
So what happens when that silent exodus isn't so silent anymore? What happens when it turns into a full-blown stampede for the exits? Well, the source lays out a very specific and pretty terrifying chain of events that it predicts will follow.
It begins with the dollar losing its status as the world's reserve currency. All of a sudden, the trillions of dollars held overseas would come flooding back home, triggering hyperinflation. At that point, the Federal Reserve faces an impossible choice: either raise interest rates dramatically and crash the economy, or keep printing money and crash the currency. The source predicts that either path leads to a massive fall in asset prices, stocks, bonds, real estate, and ultimately, the failure of major banks and pension funds.
Now, I know what a lot of people are thinking, but America's different. This time is different. Well, the source has a very direct response to that. It says military power doesn't prevent economic mathematics. Technology doesn't stop currency debasement. Exceptionalism is just a story empires tell themselves before they fall. The core argument here is that the math is just unforgiving, and it's been the same for every empire that came before.
So, in light of this whole scenario, what does the source suggest individuals could do to prepare? And look, we have to be super clear here. This is not financial advice. This is just what the analysis itself suggests. The recommendations include things like diversifying into real, tangible assets like gold, spreading capital across different countries, getting personal debt as low as possible, and investing in practical skills and relationships.
And that's really what it all boils down to, isn't it? The analysis leaves us with this final, provocative question. Has the United States somehow figured out a way to defy a 500-year-old pattern? Or are we simply watching the next predictable and inevitable turn of a very old and very powerful cycle?